Hello everyone, I'm Ranjitha BR. In this video, I'm going to discuss about the accounting source information, branches of accounting, and journal, preparation of journal entries, and preparation of ledger. First, we'll discuss about the branches of accounting. Accounting begins with the identification of transaction and ends with the presentation of financial statements. Every step in the process of accounting generates information. Generation of information is not an end in itself. It is a means to facilitate the dissemination of information among different user groups. Such information enables the interested parties to take appropriate decisions. The role of accountants in generating accounting information is to observe, screen, and recognize events and transactions. Accounting information system or accounting discipline can be divided into three branches. Number one, financial accounting, cost accounting, and management accounting. Financial accounting is the original form of accounting. It is the basic branch of accounting which helps the business concern to record, classify, and interpret the transaction relating to a given period. Cost accounting is a system of recording and calculating the cost incurred depending on the nature of activity of the concern. Management accounting, it is a system of accounting for the management. In other words, it is a branch of accounting which provides the necessary financial and cost information to the management for discharging functions. So again, I'm repeating the meaning of financial accounting. It is the original form of accounting. It is a basic branch of accounting which helps the business concern to record, classify, and interpret the transactions relating to given period. Let me discuss the importance of financial accounting. It is a language of business used to communicate the information of enterprises. It is viewed the financial transaction in a chronological record. Financial accounting helps to determining the true income of the organization. It is viewed as a process that links an information source to a set of receivers by the means of a channel of communication. As a commodity, specialized information is viewed as a service which is in demand in society, with accountants being willing to and capable of providing it. Let me move on to the meaning of journal. The term journal is derived from the French word jour, which means a day. Therefore, journal means a day book or a daily record. This is the basic book of original entry in which all the transactions are recorded in the chronological order, that is, in the order of date, as and when they take place. In journal, each transaction is classified into debit aspect and credit aspect, and both the aspects are recorded together with brief explanation for each entry. According to Professor R.N. Carter, the journal as originally used is a book of prime entry in which transactions are copied in the order of date from a memorandum or waste book. The process or act of recording transaction in the journal or original book is called journalizing. Journal entry, the record of a transaction in the journal, is called as journal entry. A brief description or explanation of a journal entry which is written below the journal entry within the brackets is called a narration. What is the feature of journal? It is a book of original or first or prime entry. It is a daily record. It records in chronological order. It gives a complete picture of each transaction. It is only a subordinate book as it helps to prepare ledger. Every entry is supported with narration. Types of journal. Simple journal entry and compound journal entry. When only two accounts are involved in a journal entry, of which one account being debited and the other account being credited, is called simple journal entry. Example: goods purchased for cash of rupees 50,000 on 1/1/2020. So it involves only two accounts, that is purchase account and cash account. So journal entry will be purchase account debited to cash account. Then compound journal entry. When the number of accounts to be debited or credited is more than one in a journal entry, such an entry is called compound journal entry. A compound journal entry is actually a combination of two or more simple journal entries. Two or more simple entries can be combined into a compound journal entry if two conditions are satisfied. Number one, if the two or more simple journal entries are to be passed on the same date, and second one, if there is common account, either debit account or credit account involved in those simple journal entries. For example, bought furniture for rupees 25,000 from Royal Furniture Mart on 1/1/2020 and rupees 5,000 paid in cash immediately, and balance of rupees 20,000 is still payable. So in the above transaction, the two simple entries involved are furniture account debtor to cash account. And next one, furniture account debtor to Royal Furniture Mart account for rupees 20,000. 5,000 what we paid to the Royal Furniture. For that cash payment, we will pass a journal entry of furniture account debtor to cash account. For rupees 20,000 for the credit transaction, we have to pass the entry for 20,000. That is furniture account debtor to Royal Furniture Mart. So these two simple journal entries can be compounded together. Then it will be like this: furniture account debtor 25,000 to cash account rupees 5,000 to Royal Furniture account rupees 20,000. Like this, we can combine simple journal entries into compound journal entries when the same date the transaction will be appeared and as well as the common account involved. So journal it records each and every transaction. But to find out a transaction affecting a person, expenses account or asset, one has to turn over all pages of journal. Hence, transactions are posted from journal to particular pages of ledger. Hence, journal contain a column ledger folio. LF. We simply call it LF or ledger folio. It is the format of journal. It involves date, particulars, ledger folio, debit and credit. So let me move on to the journal. Ledger is a book in which contains a summarized and classified form and a permanent record of all the transactions. The book in which traders all transactions are recorded in a classified and permanent form. So that is the meaning of ledger. Then the features of ledger. It is a final entry, secondary record, because primary record is a journal. So it is a secondary record. It is the principal book. It is a permanent record, and it is an analytical record. and its summarized record. So this is the ledger format, debit side and credit side. Date, particular, JF. JF means journal folio. Then amount. Again credit side, date, particulars, JF, journal folio and amount. So this is the format of ledger. So what is the meaning of posting? Posting is nothing but it is a process of transferring the entries from the journal subsidiary books to the ledger. Is called as posting. Then meaning of balancing of ledger account. Every ledger account should be balanced or closed periodically. The difference between the two sides of the ledger account is called balance. So types of balance. One is debit balance, in the second one credit balance. Debit balance means if the debit side total of an account is greater than the credit side total, the resulting balance is called debit balance and it is balanced using by balance carried down. Then credit balance. If the credit side total of an account is greater than the debit side total, the resulting balance is called credit balance. It is balanced using to balance carried down. With this, I end this session. Thank you. Thank you, one and all.